Hello traders, Gary Wagner here just after 11:30 in Honolulu, 5:30 in New York. It is Monday, June the 10th, 2019, and this is the daily report for gold and silver. We do have the precious metals lower today with the exception of palladium, and as far as gold is concerned, I believe that what we're witnessing was a well-deserved and needed consolidation and subsequent correction. Of course, this market hit an apex, highest trading point this year on Friday when traders took gold to $1,352, basis most active August. Currently, it is down about $14 at $1331.80. But the key is this. We entered our trade at $12.93. When I saw a little bit of weakness come into the market yesterday, we immediately took our stop and took it right to the market. We got out approximately $6 above current pricing. And on today's show, when we look at the technical studies, I will talk about the entry points I am looking at to re-enter from the long side. But first, let's take a look at our price board. So traders, as I said, we do have gold, silver, and platinum under pressure today. Platinum taking it the worst in terms of percentage drawdown. But first, $1331.80, down $14.30. That is most active August gold. Of course, we got in at $12.93 and change. We got out at $13.38 yesterday, about a half hour after the markets opened overseas. So we're good to that by about $4. Now, we are looking at points to re-enter. As I said, when we look at our technical studies, I'll go through all of those levels. Silver, tremendous sell-off, about 35 cents, $14.68 after a 2.3% drawdown. Platinum, very nominal change, if any, down 80 cents, 805.30. And palladium, once again, bucks the trend, up $18.50 at $1374.50. Traders, let's take a look at some charts. So traders, the trade that we put on May 30th, that was a week ago Thursday, where we bought in at $12.93, was covered as the market began to sell off as it opened in Australia yesterday afternoon here in Honolulu, and of course the beginning of the work week overseas. We're taking a look at a daily candlestick chart, and on this chart we have a basic retracement level. But before we do that, I kind of want to go over this trade. We got in at, as I said, $12.93. This is a continuous contract, so the gap that we're looking at is really not real. This is the moment in time in which they moved from June to August. We actually went into the August contract month, and we got in just below this actual break line that represents the resistance line drawn from these series of highs that came into the market. We trailed our stop up about 3 times last week, and as we went into the weekend, we actually had our stop at 1328.13. Market took out a new high that came in on Friday at 1352, was a solid up day. But then as the market opened on Sunday, I believe it was down approximately $8 when we exited the trade. We got out at 1338. So in essence, we pulled a $4,500 profit on a $10,000, $11,000 initial margin, which means that it was about 45%. It was an excellent trade, I believe, in terms of timing, getting in and getting out, but that was yesterday's news, and the question now is what levels are we looking at to re-enter the market? Because personally, I think this rally is far from over. I think we've experienced one leg of the rally, and what took the market down was the negotiation between Mexico and the United States that alleviated the necessity to move forward with a tariff which would have begun today. So with that in mind, let's take a look at our current retracement levels. So traders, I've pulled up a daily candlestick chart. This is quite enlarged, and it is looking at one fib retracement level. That retracement level really begins at 1286. That is what I'm marking as the beginning or low of this rally up unto these tops at 1352. We've obviously surpassed 1333.20. That's a 0.23% retracement. We are now in after hour market conditions. That's this little green candle. But my sense is this: the market is sold and closed well below that price point. So unless something fundamentally changes, I don't believe that what we're looking at at approximately 1330 is going to be the bottom. In terms of a technical level, the first level I'd really look at is 1320. That is the 0.38%, and 1310. That's the 50% retracement of this particular rally. At that point, I think it might be safe to enter the water. We are going to remain flat with no active trades. We just pulled a brilliant profit yesterday. This has been Gary Wagner, wishing you, as always, good trading. Have a great day. We'll talk to you tomorrow for the next daily update and review. Bye-bye.